All right, let's go. Welcome, everybody. Good to be with you tonight, Monday, June 3rd. Look at this, man. This year is going by so fast. I hope those of you who are on the call are having a great year. Those of you who are watching after the fact, wishing you the best year 2024. I hope you're knocking it out the park. That's one of the reasons that we do these calls, is so that you have access to being able to knock it out the park when it comes to your trucking company. And this year is going by so fast, guys. This lifetime will go by fast for us if we're not careful. All right. So it's important that we take a lot of the things that we discuss in this conversation, these conversations that we've had over the last several weeks, take them and run with them, guys. Use these principles and these technologies and these concepts, not just as concepts and strategies and technologies. We want to use those to move life inside of this area, your trucking company. Why not have this year, 2024, be that breakout year, right? It's like we're coming across the halfway mark, like that backstretch of the year is coming up pretty fast. Why not have this year be a year that you knock it out the park, okay? And that is the intention, for you to have so much more profitability this year, take your business to a new height, scalability-wise, be able to generate wealth and legacy for yourself and your family through this business, right? So if you're in this conversation, you are an owner, all right? We want to shift you to that paradigm of an owner to be able to create that wealth and legacy through what you do. And I'm excited to be with you on a Monday, guys. Always excited to be with you on a Monday to deliver what we deliver here, all right? So let's get started. If you didn't know, this is who I am. All right, Cheston Bulgin, by the books consulting, senior consultant over here, founder, CFO, tax strategist, and trucking CFO, your accounting superhero. All that is me. All right, so this is how you reach us: 888-4BTB now. That's 888-428-2669. You can reach us on the web at bythebooksconsultants.com or at youraccountingsuperhero.com. Or you can reach me by email, cheston@bythebooksconsultants.com. Okay. And what do? We do the accounting, specialized accounting, tax strategy. We get you situated with your business systems. We do business advisory. We make sure that you not only make more, but you keep more of your hard-earned money. That's basically what we do in a nutshell. Peace, ease, and clarity, guys. If you had peace and ease and clarity inside of what you're up to in business, you just knew with certainty that you can go out here and crush it day in and day out. You already have your systems in place, and you can just push a button and scale up if you wanted to or not. That's really where you want to be. All right, so we help you get there. Now, if you are not yet a part of the Truck Profit Academy, this is your opportunity, right? This year is your opportunity to be a part of the Truck Profit Academy, where we're delivering content. And guys, if you're already a part of the Truck Profit Academy, you've seen some of the value we've been delivering. It's only going to come more. It's going to come at a higher pace, higher velocity. And it's going to be geared toward how can we serve you the best way inside this community to give you what you need to level up. And wherever you are in your business, wherever you are in your trucking company, you want to level up. We're going to deliver that continually inside the Truck Profit Academy. So those of you on the outside, you want to be on the inside of this community, and you want to come ready to engage. Guys, I just want to say something about that. We have a few people in this group. We have people in this group right now that are hiding in the background. That never works, all right? It never works to hide in the background. I remember the days I used to hide in the background. What do I mean? I used to come to communities and not really take advantage of engaging with that community to reinforce the things that I'm up to in my business and in my life. All right. So what would happen was I would sit in the cut and kind of absorb it in the back, but I wouldn't engage. And because I didn't engage, I never really got fast access to moving forward in my business, right? It would be a slow route. Now, when I started engaging and participating in whatever group, there's something that happened to me where I was able to take that information and use it faster and grow faster, implement faster, right? So I want to encourage you, because you're going through things in your business. You're going through things day in, day out in your trucking company, and you want to move it forward fast. You might not know exactly what to do. I was on a conversation with a newer client of mine and today, and it's apparent that there are blind spots that I see people have. They just don't know what they don't know, right? And then you come across challenges. You will come across challenges, and you will think that you're on your own. You will think that you got to figure this out by yourself. And by the way, it's cool to have everything figure outable, right? But you want to use resources that are at your fingertips. And I want to encourage you to use the resource of the Truck Profit Academy to engage and ask questions and deliver some content inside of that group so that you can get your questions answered and you can cut the time gap. Okay, stop wasting time. That's what I want to say. And move forward with velocity. Get the results that you want in your company. You don't have to wait. You don't have to go through things and not get results. You can get results just by reaching out. All right, that's what this community is designed to do. All right, and that's what we're looking to do. We're looking to deliver value, and that's so that you can get results faster in your trucking company. Okay. Enough about that. So you can go and get started. If you're not inside this group already, you can sign up at truckprofitacademy.com. Quick disclaimer before we get started, guys. The following is for educational purposes only and is not to be considered financial, accounting, or legal advice. Please consult your tax, accounting, and or legal professional for specific advice. Now, we began a conversation last week, and there's a Truck Profit Accelerator, is what we call this Truck Profit Accelerator blueprint. All right, and this is the systems blueprint inside Truck Profit Accelerator. All right, so we're building this out so that we make it plain and simple for you on how to create systems to help move your trucking company. All right, so you can do more with less. All right, that's the whole idea behind systems, is so that you can do more with less. You can have that peace, ease, and clarity that we talked about. You just know that things are working inside of your business day in, day out. All right, so we talked last week, we began this conversation, and the first thing we talked about was trucking management software, TMS. All right, so we're going to go over some more in this conversation. We're continuing this. All right, so last week we talked about the TMS, trucking management software. This week we're going to be talking about a financial tracking software. Okay, we're going to talk about this. Like, what are some financial tracking softwares that you can use in your business to help manage your trucking company? Why would you want to do this? We're going to talk about all of that. Like, why would you even need a financial tracking software? And why is it so important to have that in addition to what we talked about last week, trucking management software, right? We want to create systems that are bulletproof in your trucking company so that when you go to create a specific outcome, like you have a goal that you want to accomplish in your trucking company, you know without a shadow of a doubt, you have a great degree of certainty that you're going to get there. All right, so the systems help you do that, is what I want to say. Okay. Now, just real quick. Technology. Let's go. Here we go. Let's go. Pause this. And we're going to go to the next slide here. Just to recap, guys. Just to recap. All right. So this is a recap. If you were here in this conversation last week, I talked about some of these icons. They're just basically technology that we can use to help run your trucking company. Some of these are trucking management software, which what we talked about last week. And some of these are financial accounting software, which we're going to talk about this week. Some of us, the technology that we've been using to run your trucking company, the technology you've been using has been spreadsheets. Nothing wrong with spreadsheets, like Excel, spreadsheets, Google Docs, whatever you're using. Spreadsheets to manage and get clear on what your numbers are. That's fine. And it's going to also limit you in your ability to do high-level analytics in your business. Now, there's going to come a point in time where you really want to be sharp in your decision-making, right? You also want to be in the mode of not having to run rampant come tax season and like scramble to organize all your finances for tax season so that you can be compliant when it comes to filing your taxes, or wait too long to file your taxes. There's some things that you want to be able to take advantage of. And for example, if you have, retirement contributions, you can contribute to your retirement up until the time that you file your taxes, your individual income taxes for that year. So if the tax year ends, like for example, 2024, it comes to a close, 12/31/2024, year is done. We go into January, February, March. You have up until April 15th to have retirement contributions for this year, 2024. You have up until that deadline to contribute, but you won't know how much, right? You won't know how much to contribute to your retirement to a degree, because like you'll make some money in your trucking company and you want to save taxes. You may want to save taxes by way of contributing to your retirement so that you defer the amount of taxes that you're going to pay for 2024. But if you don't keep up to date with your financials, if you don't know how much you're making, like by the end of the year, you could miss out on tax savings, significant tax savings, because you won't know how much to contribute, or you may contribute too much, not giving yourself enough cash flow to work with. So you want to know financially where you stand at any given point in time so you can make decisions like that and a lot more. Okay. Now, trucking management software is fantastic in terms of fleet management, fleet operations. We talked about that last week. And, one of the things that it does deliver is the front end accounting. And front end accounting means the revenue. And also it's good for tracking your driver pay, right? It's also good for tracking your fuel. So a lot of times fuel cards connect to your trucking management software, right? But it's not so good at tracking all your other expenses, like all your other outflows, right? In a way in which you can get real clean visibility of what you've been doing financially, profit and loss wise, or how's your balance sheet being impacted? What's your cash flow position and what's impacting your cash flow? Those things you won't be able to really see and have full visibility on with a TMS alone. One, the trucking management software, most of them are not designed to connect to your financial institutions to pull in all the other transactional data. So there's a whole series of transactions and expenses, and maybe even income, right? That's not related to trucking, because sometimes you'll have, like if you have another division in the trucking that just does rental, whether it's equipment rental like trailer rentals, and there's income from that, right, to record that, or there's other income in terms of property rental. Maybe you have land that you're using for your trucking company, and because you have land for your trucking company, a real good like size property, you're using some of that land to rent out space for parking to other carriers or owner operators, right? So you might have other revenue sources that are not really tracked inside your trucking management software, but you will need a financial tracking software to bring all of that together, right? This is your hub where you can see all things financial related to your company, which will really help with you making decisions, right? It really helps with you feeling good about the direction of your company too when you're winning. Like you get put a plan together and you see exactly how you're growing. You have a target that you have. For instance, a pretty decent target would be a 25% growth rate for your company, right? Especially if you're smaller and you want to grow. A 25% growth rate, which means you're going to grow by 25% year over year, right? But you can measure those things easily with financial tracking software, like something like a QuickBooks, okay, or a Xero, or I want to say like a Wave or something like that. There's a lot of different financial tracking technologies, software that you can use to bring it all together. Sage is fantastic, right? NetSuite, fantastic software to use to track financials in your business, okay? So what I want to do before we get off the line here is I want to take a look and see what it would be like to see your financials inside of a financial tracking software. We're going to use QuickBooks for our purposes here. So we're going to use QuickBooks and give you an idea of what this looks like, okay? And I'm going to grab some reports here for us so we're clear. Guys, if you're on this call, the Zoom call with me, you can put questions, comments in the chat here, and I may answer some of those while we're on the call. That's the benefit of being on the Zoom call with me, right? So if you want to do that, you go ahead. Okay. Now, share. Boom. All right. So right now we should be looking at QuickBooks, and this is the reporting section of QuickBooks. All right. And I'm gonna need some feedback from you guys on the call. Can you see my screen? Yes or no? I just did a share. I want to make sure that we're good to go. If you could see not just my screen, but you can see QuickBooks. All right. It looks like ABC Trucking. All right. Fantastic. And thank you. Thank you. All right. So now we're going to take a look at what we want to see when it comes to financial tracking and reporting. Most times we want to take a look at our profit and loss statement, and then our balance sheet, and then our statement of cash flow, our cash flow statement. All right, so real quick. Now, some of these things that we're looking at here, of course, we got revenue. All right. And, I'm going to do a brief overview of how to read this financial statement. Some of us are good at this. Some of us are not as good at reading financial statements. Okay. But what I want to do here is just go pretty much line by line to give you an idea of how important it is to have this set of financial data in front of your fingertips. You will not get this in just trucking management software alone. It won't give you all these details. It'll give you this top line that we see here called revenue. Okay, so I'm going to just do this. I'm going to zoom in too so that we can really, really see this. Okay. So it will give us this revenue, right, based on whatever invoices we submit through the trucking management software. Now, if you're using that software really well, like what we talked about last week, then you have a process in which you're invoicing your customers, right? On your drivers just submitting the bill of lading. You have the rate cons and everything attached to your jobs, and then you're submitting those to either directly to your broker, your customer, or to a factoring company. But by doing that, the revenue is going to be tracked, and it wants to line up with what we see here. All right, so you'll have this in both sides, the top line, the revenue. All right, now the thing that you might have here is your owner operators, like your lease on carriers, because we can do settlements inside of your TMS. This should line up as well, right? Because this is a direct cost that will be tracked in both sides. And then also your drivers, because you have drivers that get settlements through your TMS. This would also want to line up on both sides, right? So you'll see that. If you have fuel cards connected, this will also line up with your TMS if you're tracking all of your fuel costs. Now, the thing is, with the trucking management software, it's linked to fuel cards a lot of times. You can link a fuel card, okay? And the driver will have access to a fuel card and they can do it that way. But what happens when you don't use a fuel card, you pay fuel another way? Then you'll have a discrepancy, right? But you won't have a discrepancy if you use the other way, and that other way is connected to your financial software, which will always be connected to, right? So you'll be able to see really how much you're spending on fuel. Now, when I look at this, before I go any further down the line, I want to make sure we're getting a good idea of what the impact is of each line item on your business. Now, what am I doing here? I'm looking at, well, how much of revenue is it impacting? Like, where are my major costs? Off the bat, right now, we know this is 100% of revenue. Then out of that percentage of revenue, these are our direct costs, right? We call it like cost of revenue or cost of goods sold if you're doing product sales, but in this industry, it's like direct cost of revenue. So basically what that means is that if the truck moves, then you have these costs. If the truck does not move, you don't have these costs, right? So that's why you have fuel here, because it'll cost you fuel every time you move the truck. That's why you have drivers here, because drivers get paid when they drive that truck. That's also why you have maintenance here as well. Maintenance could appear as though it's not a direct cost, but it is. Typically it'll cost you wear and tear on that vehicle every time you move it. So you want to track how much maintenance, like wear and tear, like maintenance is costing you, because it's a direct cost of you producing what you produce day in and day out in the trucking company, in the trucking industry. Okay. So we're looking at the impact of this, right? So by far, like your driver costs are more so here with ABC Trucking. The driver costs are impacting the most in their top line expenses. Top line expenses are direct costs, all right? Direct costs, top line expenses Those are the same synonymous terminology that I'm using, okay? But these are your direct costs, all right? So your driver impact is more, right? By far, almost double the next thing, right? So it's good to know, like, man, well, if I know this information, then you can start making financial decisions, which is one of the great things about having a financial software. You can say, oh man, I need to go to work on, reducing driver costs. Is that possible? And well, let's look, let's see, what can we do? What can we go to work on? You know, is that we need to increase like the type of, we need to change up the type of lanes that we do and the type of equipment that we do in order to increase the revenue, right? So that we can, offset that percentage wise, or is it that we need to see if we can get drivers at a less of a cost, right? So you want to look at these numbers, so because it'll give you insight to things that you can go to work on in your business. All right. Now, below here, you see this is gross profit. I'm going to just talk about that real quick before we move on. But this financial software, guys, it'll allow you to see this. It'll allow you also to see it in reference to how you've done in prior periods, which means how you've done in prior years, how you've done in prior months, in comparison to how you're doing it today. Okay. Now, at the end of this section here that we're looking at, gross profit, we want to make sure that this gross profit number is as high as possible when we're running our company. Like, what things can we do to increase that gross profit operationally? Now, if you don't know what it is, if you don't know how you're performing in terms of gross profit, and basically gross profit is all the money that you brought in minus how much it costs you to produce that money, that money, all right, directly. Like, you had to do some things in order to produce that money. So, well, how much did that cost you to produce it, and what do you have left over? And what you have left over is your gross profit. Okay. In this example, your gross profit, this is really decent in the trucking industry, right? 60% or more. That's really high. They're like, yes, winning. 100%, yes. All right. Now, what do I want to see? I want to see gross profit, somewhere around at least 35% or more of gross profit. That's what I want to see. 35% is real low, critical, like at the real bottom line edge of where you want to be gross profit wise. Right, after all this is said and done. And after we look at our gross profit, which is that money that we get to keep after we perform the jobs, right? What it costs us to perform the jobs, that's what's left over. Then we have all of our fixed costs after that, the things that you have to pay day in and day out. All right, so if we don't have the tracking software, the financial tracking software, then we won't catch all of these things. This is the major factor when thinking about tracking the performance of your business, because there's a lot of waste that could be incurred if we're not watching this. The thing is, what I can measure, I can manage. What I can manage, I can master. What I can measure, I can manage. What I can manage, I can master. So if I can measure all these aspects, like to 100%, nothing slips through my fingertips. I have all the financial details I need to know what I'm doing in this business all the time. Well, then I can make really sound choices to improve my efficiency in the business. That is the idea. All right. Now, sometimes it might occur to you, like, man, I'm doing all I can do, and I don't know what else to do, but you're not monitoring these things. So you don't even know what you're talking about, really. It's all in your head. But when we get it out of your head and it comes out here, then you can make real sound choices in your trucking company. All right. So these things like insurance, office expenses, legal professional fees, and utilities if you have a physical location. These are things that you would have to pay, whether or not you did any load or did any job. It doesn't matter, right? You still have to pay these expenses no matter what. All right. Now, that's the difference between these direct costs and these fixed costs. Now, if we look, and really down the line, this the sample company, ABC Trucking, they're doing really, really good as the sample company. You might be like, man, I wish my trucking company was doing this efficient and had a net operating income bottom line of 44% or more, right? Because a lot of times you'll see that the operating margin for trucking companies will be less than 10%. When I say the operating margin, that number at the bottom line, net operating income, that percentage mark would be at 10% or less for a lot of the trucking companies, even smaller ones, right? And there's a way to improve it, to go at least up to, I've seen it go up to 25% inside of operating for smaller trucking companies and really, really crush it, right? So what I want to leave you with inside of this part of our conversation is the crucial nature of having a financial tracking software to bring everything together financially in your company. This is one aspect. The performance is what we call the profit and loss, but then we have the balance sheet. Well, how well are we doing when it comes to the assets that we able to accumulate plus the equity that we have in the company? That's really what I'm looking at on the balance sheet. And we're going to take a look at that right now. So if we take a look at the balance sheet, really, I'm going to simplify this. There's a formula here. It's assets equal liabilities and equity, right? Assets equal liabilities and equity. It always balances out. That's why they call it a balance sheet. All right. So to go into further detail, what are assets? We have current assets. We have fixed assets. Current assets are things that are liquid, which means it's like cash and cash equivalents. Things are almost equal to cash. Are things that can be converted to cash in like less than a year, right? They're very spendable, liquid assets is what we call those current assets. And then we have, and you can see what types of current assets we have. Example of that would be bank accounts, of course. Cash on hand would be another example of that. Accounts receivable, which means like you have an aging, like people that owe you money in like 30 days or so, or 45 days or 60 days, right? That's accounts receivable. And then we have something called UF, undeposited funds, which means money that has been paid is not yet in a bank account. You have yet to deposit. These are like checks you have, cash you have on hand that you have to deposit into a bank account or some other account. And there are other current assets we can talk about, like inventory. You don't really deal with that so much. Some people do in the trucking industry, and they deal with inventory. All right, but those are also considered current assets. All right, then we have things called fixed assets. Things that are not so easily spendable. They're not liquid, right? They're not easily convertible to cash, like your truck, your tractor, like trailers, equipment, furniture and fixtures, real estate. These are all fixed assets, right? These are not liquid. These are not really spendable things. It would take a lot to spend these, right? You have to sell them. You have to get a market value of it. It's like a lot that takes to convert it to cash, okay? And then we have on here, we have their fixed assets and current assets. Total assets is a combination thereof. And right here we see it's 1.7 million in total assets. Now, this is only half the story. It doesn't mean that we're doing really well financially just because we have 1.7 million in assets. It doesn't necessarily mean that. All right, we want to take a look. Well, what are these assets comprised of? Is it comprised of mostly debt, or is it comprised of a lot of equity in the company, which means it's money that is not owed to anybody else. It's money that the business has in it, free and clear, right? So we want to look at that to understand the financial health. Now, we won't get this, all right? We won't get this in your TMS. Not to the degree in accuracy. Especially, you won't get this with most of them at all. And then the ones that do have them, you won't get it with accuracy. All right? So you want to have an idea of how well you're doing financially. A balanced sheet basically tells me the overall financial health of the business. And it's like going to the doctor's office and they're doing your vitals, they're taking your blood pressure, and they're doing your heart rate, and they're checking all your other vitals, right? This is what the balance sheet is for your business. It is that nature of a thing. It tells you the health of your business. All right. So this is so important to understand. Now you won't have this outside of a financial tracking software that will tell you this to a degree of accuracy. So you want to have it accurately reported for yourself. All right. But this half of it really gives me the idea. Okay, what are the assets comprised of? Where do my assets come from? So if I take a look at, liability wise, there's so many liabilities. Okay, this tells me this. Okay, out of the 1.7 million, 590,000 is loans, which is not bad. Look at that. Look at that. I like that, right? That's like, let's just do a quick calculation. All right, I want to do a quick calculation for you. 590,000 divided by 1,720 451. Man, that's only 30%. That's 30% debt to equity is really what that is. 34% debt to equity. All right, it's not bad. All right, it's a little over. Okay, it's not bad. It's a little over. All right, and like we look at those things when we work with clients and how the health of their business is and what we want to go work on in order to maintain optimal health in the business. But it's right there. It's like borderline. It's like a little bit over what we want to see. All right, but look at that. We have equity. Equity is basically how much revenue, basically net profit that the company's made over time, cumulatively, plus whatever has been invested in the company by the owners, shareholders, or direct owners of the company. All right, so look at this. Look at the equity number. So the equity number is 1.1 million. Right, so there's a lot more equity in it than there's debt, which is always a great sign. It's great to have more equity than debt, but then how much proportionally do you want to have more? It's another story. You want to look at that. All right, specifically. All right, so the last thing, guys, all right, I want to say this last thing. We're going to wrap it up. We're going to take about 5 more minutes to wrap this up. I want to look at the cash flow statement. Okay, that's what we want to look at. Now, cash flow, we talked about this in an earlier conversation about what cash flow is. There's so many components of it. All right, now, I'm going to run it all day so we can see the impact of like cash flow for the sample company. All right. Now we have cash flow from operating, which is basically like when you go out here and do what you do in terms of, taking on loads, invoicing your clients, paying your bills, all the activity that you do, that's operating, right, inside of producing loads and everything, all right, and paying all your bills, right, and paying all the expenses that go along with producing that and paying all your fixed costs and everything else, that's operating, okay? Also all your wages, all your contractor payments, all the income that you make, all the invoices that are on the books that haven't been paid versus the ones that have been paid, all the credit, like the bills that you have, like things that your suppliers have credited you that you have to pay over time, those types of things are included in your operating cash flow. All right, so that's cash flow from operating. And then you have an impact to that. So we want to have this be a net positive if possible. Every aspect we want to have a net positive with cash flow. What do we want? Why? Because we want our cash to increase over time. That's why. Your cash increases over time is literally like, this is why we go into businesses, because it's like you're printing money. Literally like you're making money out of thin air. Like cash increases over time. Now, if you get into business and your cash flow is decreasing, it's like, man, what are you doing? Right? That's the whole idea, is like to increase cash. That's what we want to do. Right? So cash flow from operating is, like I said, just from your all the operating activities, invoicing, dropping off loads, all the expenses that you incur to do that. Right? If you have a net positive there, with that is a huge plus. Okay. Then investing activities means basically that you are buying equipment or selling off equipment. Okay. So sometimes you might take money and buy a new truck, new trailer. That has an impact on cash flow, right? Not how much you put down on it. Maybe you put like a certain amount, 20% or 30% down, but your cash flow goes down by whatever cash you put into that investment, right? Or if you sell a piece of equipment, it has the opposite effect. Cash goes up because you sell off equipment, right? So you want to take a look at how this is impacting you, and you want to be strategic about investing, all right? The other thing is cash flow from financing. So financing is on the liabilities and equity side of your balance sheet. So basically, what you're doing is you are either taking loans, paying off loans, or injecting capital into your business, or taking out draws or distribution for your business. All right. So this is what you want to see. You want to see what all that activity comes to at the end of the day. So the cash increase for this company, of course, is positive, very, very good. Right. And this is what you want for your company. And guys, if you did not have a financial tracking software, you would not be able to do these things. Again, you would not be able to do these, like see this information and get analytical with your business and make choices based on what you're seeing financially to improve the overall financial health of your business and generate that wealth and legacy that we're talking about. All right. There are so many different types of financial tracking software, guys. We just use QuickBooks here. We use QuickBooks because that's one of the things that we are pretty much wizards at, QuickBooks, right? We use it all the time, day in and day out. But you will need something like this, not just a trucking management software. You're going to need something like this to optimize the systems in your trucking company. So we're in a conversation called the Truck Profit Accelerator Blueprint, and this is a systems blueprint within inside the Truck Profit Accelerator. And as a part of this blueprint, financial tracking software is something that you want to have, right? So that you can generate freedom, wealth, and legacy, and have that peace, ease, and clarity in what you do day in and day out. With that being said, this is our conversation for today, guys. If you have any questions about this, make sure you drop that in the Truck Profit Academy, right? No matter where you are, join in that group, all right? Make sure you comment in there, ask your questions in there. We will respond. We'll make sure that you have all the resources that you need to move your trucking company forward. It's been great being with you, guys. I will see you next week. Have a good night.